Let me turn, Mr. Speaker, to the revenue required for these spending plans. Members of the House, you've been very patient and you're probably thinking of the need for liquid refreshments and, of course, the cost thereof. I will say something about that in a moment. But first, let me report on the revenue side. I'm pleased to report that tax revenue has recovered during 2010-11. The revised estimate is 672 billion rands, or 12.3% higher than last year. Personal income tax has increased strongly, as has VAT receipts and customs duties. However, corporate income tax revenue has remained below projections, indicating the effect of the 2009 recession on company profits and maybe something else. Total budget revenue, including provincial receipts and income of social security funds and public entities, is 755 billion rands, or 13.6% above the 2009-10 estimate. The budget review includes for the first time a tax expenditure statement. This is a summary of potential tax revenues forgone as a result of various tax incentives. The purpose of the statement is to make transparent those fiscal incentives or indirect subsidies that lie behind the headline revenue and spending numbers. The initial estimate puts the value of tax expenditure, that's money we give away in one form or another, at 78 billion rands a year. We are also publishing the latest edition of the annual tax statistics, which provides the most detailed view to date of our tax base and revenue contributions and helps to complete the overall picture of the budget system. So what are our proposals for raising more money? Mr. Speaker, revisions to the personal income tax brackets and rebates are proposed, which represent relief for individuals to the extent of 8.1 billion rands. These adjustments compensate virtually only for the effects of inflation for the coming year and the balance of the fiscal drag effect that could not be accommodated last year. From March 2011, tax will be payable only on income above 59,750 for taxpayers below 65 and 93,150 for those 65 and older. A third rebate of 2,000 rands per year is proposed, increasing the tax threshold for taxpayers aged 75 and older to 104,261. In other words, the over 75s get an additional tax break. An increase in the annual tax-free interest income to 22,800 for individuals below 65 is proposed, and to 33,000 for individuals 65 years and over. The Treasury is exploring the possibility of incentivized saving schemes for housing and for education as alternatives to these exemptions. The tax-free lump sum benefit upon retirement will increase from 300,000 to 315,000. As in past years, inflation-related increases will be made to the monthly thresholds for tax-deductible contributions to medical schemes. These deductions and those for qualifying out-of-pocket medical expenses will be converted into tax credits with effect from March 2012. A tax credit is a more equitable way since it provides for an equal benefit to taxpayers regardless of their income. Right now, it's the wealthier people who benefit more. Changes to the tax treatment and administration of contributions to retirement funds are also proposed. These will simplify administration and improve the fairness of the system. There will be extensive consultation on this matter, but amongst the proposals to be consulted on include the treatment of employer contributions as a fringe benefit, limits on tax-deductible contributions, and the alignment of tax treatment of provident and pension funds. Some of the ideas are that from March 2012, an employer's contribution will be treated as a taxable fringe benefit, and employees will be allowed to deduct possibly up to 22.5% of taxable income for contributions to approved retirement funds. A maximum, it is proposed, of 200,000 rands a year will be deductible with a view to protecting workers' savings. It is proposed that the one-third lump sum withdrawal limit applicable to pension and retirement annuity funds should also apply to provident funds. What's happening here is people, when they get into a bit of difficulty or need, withdraw all of their savings. and at the end of their working life don't have much on which to depend upon. So these are some of the proposals that will be looked at. The following capital gains exclusion amounts will be increased from 1 March 2011. For individuals and special trusts from 17,500 to 20,000, on death from 120,000 to 200,000, on disposal of a small business when a person is 55 years or older from 750,000 to 900,000. The annual trading income exemption of public benefit organizations will increase from 150,000 to 200,000, and for recreational clubs from 100,000 to 120,000. We've decided to become a bit innovative this year and impose a withholding tax on gambling winnings. Mr. Speaker, last year we indicated that the taxation of gambling winnings above 25,000 rands, of gambling winnings would come under review. With effect from April 2012, all winnings above 25,000 rands, including payouts from the National Lottery, will be subject to a final 15% withholding tax. This is in line with practice in a number of other countries, such as the United States, where that tax is 30%. We hope that this will assist in discouraging excessive gambling. But of course, if you want to contribute,
Honourable members.
If you want to contribute to the fiscus, please do go and gamble so we can get the 15%. Despite the obvious merits of this argument, I expect vigorous debate during the parliamentary process. Not today, please. The National Health Insurance. Proposals are under review for a national health insurance system as part of the broader restructuring and enhancement of health services. There will be substantial cost implications. We will consider and consult on, let me repeat, we will consider and consult on options for meeting the funding requirements, including a payroll tax payable by employers, an increase in the VAT rate, and a surcharge on individuals' taxable income. Now, let me repeat before you all get anxious about this. These are all options. We will have to consider the pros and the cons of each of these options and answer the question, we do require more money to get this scheme going, but ultimately it will benefit all South Africans. Where do we get it from, and what's the best form in which to do it? The fiscal and financial implications of health system reform and alternative revenue sources will be examined in the year ahead. For businesses, the following is proposed. As indicated in previous years, a dividends tax will take effect on the 1st of April 2012, replacing the secondary tax on companies. Dividend schemes that undermine the tax base will be closed by treating the dividends at issue as ordinary revenue. These include dividend sessions where taxpayers effectively purchase tax-free dividends without any stake in underlying shares. Government introduced the concept of a venture capital company into the Income Tax Act in 2009, but the response to this was poor. The approach will be refined so as to facilitate greater access to equity finance by small and medium businesses and junior mining companies. From March 2011, the turnover tax for micro businesses with annual turnover of up to R1 million will be adjusted so that tax will be payable only if turnover exceeds 150,000 rands a year. In other words, below that you pay no tax. The rate structure will also be reviewed. Also from 1 March 2012, micro businesses that register for VAT will no longer be barred from registering for turnover tax. The learnership tax incentive designed to support youth employment will expire in September 2011. Government proposes to extend this for a further 5 years, but subject to an analysis of its effectiveness with all stakeholders. The take-up until now has been low. A youth employment subsidy is proposed. Subject to completion of consultations, it will take the form of a tax credit costing 5 billion rands over 3 years to be administered by the South African Revenue Service through the PAYE system, but this is subject to further consultations. To support the objectives of the Industrial Policy Action Plan and the New Growth Path, certain investments qualify for tax relief. Consideration will be given to expanding such incentives for labor-intensive projects in industrial development zones. The transfer duty exemption threshold will be increased from 500,000 to 600,000 rands. Excise duties on alcoholic beverages will be increased between 4.5 and 10.3%, an increase of 6.4 cents. Wait a minute. This is the part you need to consider before you go and have a drink. 6.4 cents for a 340 ml can of beer, 13.5 cents for a bottle of wine, or 2.86 cents for a bottle of spirits. Now, Mr. President, I must get this one right. Izinyembezi zikawini. It's Queen's Tears. It comes from his territory. Taxes on tobacco products will increase between 6 and 10.2%, 80 cents more for a packet of cigarettes. Currently, there is an ad valorem excise tax on motor vehicles. The rate increases as the price of vehicles increase. These rates will remain unchanged below a purchase price of 900,000. For vehicles above 900,000 rands, the tax rate will increase to a maximum of 25% from the present 20%. The general fuel levy will increase by 10 cents a litre on both petrol and diesel on 6 April 2011. The road accident fund levy will be increased by 8 cents to 80 cents a litre. Increases will take effect on the 1st of October in the air passenger departure tax on flights to international destinations. The levy on electricity generated from non-renewable and nuclear energy sources will increase by 0.5 cents to 2.5 cents from April 2011. The increase should not impact on electricity tariffs, as it has already been taken into account in the National Energy Regulator's approved tariff structure. Mr. Speaker, allow me to pay tribute again to the continued support that all of us receive from millions of honest taxpayers. Can we applaud them, please? Their contributions are reflected in the recovery of tax revenue this year. We have been able to expand spending where other nations have been forced into austerity adjustments. Even those who have not contributed fully to date have begun to come forward to take advantage of the Reserve Bank SARS voluntary disclosure program. Others who wish to have until the end of October this year to join the others have until the end of October this year to join the 1,200 applicants so far. Administrative reforms will continue to focus on ensuring that all those who earn an income through employment or other economic activity pay what is due to the fiscus. This year, SARS will turn its attention to enhancements in the tax business process, including corporate income tax, VAT, and the enhanced turnover tax for emerging businesses. As with personal income tax, a prerequisite for these improvements is an accurate picture of all business entities, no matter their size or tax liability. SARS, in partnership with other state institutions, will make significant improvements to the business registration process this year, including conducting a door-to-door drive in all sectors of our economy to complete the picture. Tax and customs evasion remains a serious threat. Working together, the police, the prosecuting authority, the Financial Intelligence Center, and SARS ensured that more than 200 taxpayers were convicted of fraud and tax evasion during the last 6 months alone. Recently, customs officers, with the support of police, impounded nearly 3,000 illegally imported second-hand vehicles. 2 significant tobacco smuggling rings have been snuffed out, and a tobacco manufacturer has been shut down in the last month. We are also, in conjunction with the tobacco industry, investigating a new method of marking and authenticating legal cigarettes with a counterfeit-proof digital system to replace the current diamond mark. Mr. Speaker, the sector most visibly affected by the illicit economy in recent years has been the clothing and textile industry, resulting in significant losses of jobs in local manufacturing plants. In the coming months, a multidisciplinary task team comprising of representatives from the manufacturing, importing, and retail industries and a range of public sector stakeholders will begin interventions across the entire value chain to clamp down on illicit clothing and textile imports.